One of the biggest lies banks still tell us in 2025 is that your money grows just by sitting in a savings account. Sure, the numbers go up a little from interest, but the real value of your money? It's quietly shrinking. Inflation remains stubborn around the world. Major economies keep printing money to cover deficits, and bank interest rates continue to lag far behind. That means keeping too much cash isn't safe anymore. It's actually a guaranteed loss. In today's video, we'll break down 6 assets that protect your wealth from erosion and help you build long-term, even generational wealth. 1. God's money, gold, silver, and platinum. Cash can be printed endlessly. Precious metals cannot. They're finite, scarce, and impossible to manufacture out of thin air. Over the past 2 years, we've seen exactly why wealthy people always keep part of their money in metals. Central banks worldwide, from China to Turkey, continue buying gold at record levels. Why? Because gold historically rises when currencies weaken. For perspective, before the 1950s, gold was $35 an ounce. By 2023, it passed $2,000. And by early 2025, gold surged even higher due to geopolitical uncertainty and rising government debt. While cash loses buying power, gold keeps climbing. The best part? You no longer need to buy bars or coins. Gold ETFs, digital gold, and precious metal mutual funds let you invest with as little as $10. No storage or insurance required. Gold protects your value. Silver and platinum offer similar benefits and often outperform during industrial growth cycles. 2. Industrial commodities, the raw materials of the future. Precious metals hold value because they're rare. Industrial commodities rise because they're essential. In recent years, demand for materials like cobalt, nickel, lithium, copper, and rare earth metals has skyrocketed. Why? Because they power everything. EV batteries, AI data centers, renewable energy grids, the entire modern world. As the global economy moves toward electrification and high-tech infrastructure, industrial metals are becoming the new oil. For example, copper demand is surging due to EV production and renewable energy projects. Lithium remains volatile but is still critical for battery storage. Cobalt, though expensive to mine, is crucial for high-density batteries. Regular investors can't store copper bars or barrels of nickel. Instead, you can invest through mining stocks, commodity ETFs, futures contracts, metals-focused mutual funds. When certain metals enter high-demand cycles, they can supercharge your portfolio. 3. Safe haven currencies. The strongest money wins. Since no modern currency is backed by gold, geopolitical stability becomes everything. That's why wealthy investors rely on safe haven currencies like the Swiss franc, the Singapore dollar, the British pound, and increasingly the Chinese yuan for global trade. Whenever markets panic, billions flow into these currencies. We saw this during multiple geopolitical crises between 2022 and 2024, when investors rushed money into Switzerland and Singapore. You don't need a Swiss bank account to participate. You can invest through currency ETFs, forex platforms, multi-currency accounts. These currencies stay stable even when the global economy doesn't. 4. Sovereign-backed assets, government-guaranteed safety. Your currency has value only because your government promises it does, and because people believe that promise. That's why sovereign-backed assets are among the safest places to store wealth. In the U.S., these include Treasury bills, T-bills, Treasury notes, Treasury bonds, E-bonds. In other countries, these are known as government securities, or GSECs. They're backed by the full faith and credit of the government, meaning they only fail if the government itself collapses. But not all government securities are equal. Countries with strong credit ratings offer the safest returns. Nations with unstable politics or debt crises carry much higher risk. Today, small investors can easily buy U.S. Treasuries through Treasury Direct or through low-fee bond ETFs. These assets protect your wealth better than cash, especially during recessions. 5. Value stocks and dividend mutual funds. Steady, reliable growth. Treasury securities are safe, but they don't offer high returns. That's where stocks come in. But remember, not all stocks are equal. Growth stocks like tech companies can surge, but come with volatility. Value stocks are established companies with stable demand, and they usually pay dividends. These include sectors like industrial manufacturing, consumer staples, utilities, energy, financial services. Value stocks tend to perform better during inflation and high interest rate environments because their cash flows remain stable. If researching individual companies feels overwhelming, you can choose high dividend index funds, value stock ETFs, blue chip dividend mutual funds. These provide consistent income while protecting long-term capital. 6. Land and real estate, permanent scarcity. Land is one of the few assets that never depreciates because we can't make more of it. Despite ups and downs in housing markets, real estate remains one of the most reliable inflation hedges in history. Between the 1990s and 2020s, property prices in many major economies more than tripled. In 2025, real estate remains powerful for wealth protection because land is limited, populations keep growing, businesses always need space, rents rise with inflation, and you don't need huge capital to get started. You can invest through REITs, ETFs, crowdfunded real estate platforms, fractional property ownership, REITs focused on healthcare, logistics, data centers, and residential communities offer steady dividends and long-term growth. 7. Collectibles, where scarcity drives extreme value. This asset class is often overlooked by beginners, but embraced by the ultra-rich. Collectibles include vintage cars, luxury watches, fine art, designer handbags, rare books, sports memorabilia. These items gain value because they're rare and culturally significant. A limited edition watch or vintage Ferrari can sell for many times its original price decades later. Iconic artworks continue setting auction records. And today, you don't need millions to participate. Modern platforms allow fractional ownership of art, trading rare collectibles, investing in cards, comics, sneakers, and toys. Even small investments in the right collectibles can produce massive returns, if you know what you're doing. Final thoughts. Keeping cash in the bank is no longer safe. Inflation slowly eats it away. Governments print more every year, and bank interest rarely keeps up. The world's wealthiest people protect themselves by owning real assets, things that cannot be printed or easily manipulated. To summarize, the top wealth-protecting assets for 2025 and beyond are 1. Gold, silver, and platinum. 2. Industrial commodities. 3. Safe haven currencies. 4. Sovereign-backed securities. 5. Value stocks and dividend funds. 6. Land, real estate, and collectibles. Build a balanced mix of these, and you'll protect yourself from inflation while building long-term wealth.